Good morning, everybody. Welcome to our Moving Markets podcast. It is Tuesday, the 24th of June, 2025. U.S. stock market has been open for almost exactly 30 minutes, and we are off to a fantastic start. A lot more good news than bad news coming, both for the markets, for the economy more generally and broadly, certainly for the country, the world, the Middle East. I mean, take your pick. There is a lot more good news than bad news going on right now, and that is very directly impacting the markets and might continue to do so for some time. So let's start with the biggest news. Yesterday late, the market had been closed for at least a couple of hours. The President Trump got on line and said that he had brokered a ceasefire deal with Israel and Iran, and that he was calling it a 12-day war was coming to an official end. And that got a little bit, that was great news. You can't, even if you're hyper partisan and absolutely hate Donald Trump, you would have a hard time arguing that that's not good news, that that's not a good thing. And so, barring that hyper partisanship where you tried to find a reason for that to be negative, it's good news. It's good news for everybody involved. It's good news for the world. It got a little shaky and a little tenuous. I woke up this morning, seeing on TV and hearing reports that both countries, Iran and Israel, had already broken the ceasefire deal, had fired off a few missiles at each other. Sadly, Iran sent some missiles into northern Israel, and I heard reported a family of 4 was killed in a direct hit. That prompted Israel to put some planes in the air, and they were flying to Iran, I think, to drop a massive amount of new bombs, and Trump made some phone calls and demanded that Israel not do that. And so I think that was averted, and the ceasefire was announced. Then it looked like it was going to be a little bit shaky, and now it looks like it's going to be okay, and it seems to be holding. It's not a done deal yet. Either or both countries could still do the wrong thing and try and escalate things or back out of the ceasefire situation. But right now it looks like it's holding. So you've got that happening. As a direct result of that, this is very much a cause-effect type of thing. As a direct result of that, oil is down, and it's down dramatically. I think less than, I want to say 48, maybe 72 hours ago, the oil was up over 77. It's come from 77 a barrel down to 65. Take that $12 and divide it by the 77 that it was at. That's a 15% drop just in a couple of days, and 5% today, 5% this morning. And look, lower oil prices, you might be able to, if you wanted to be a real glasses half empty instead of glasses half full person, you could look at falling oil prices and say that there comes a point in time with these oil prices where it starts having a negative impact. It can hurt jobs in that industry. It is a huge industry, and you can see a little bit of a negative effect in some sectors. But generally speaking, a lower price of oil benefits almost everyone and everything. Everything costs less to create, costs less to ship, costs less to deliver. The end consumer ends up paying less. Everything goes down in price when the price of oil goes down. We are still a world largely and almost completely dependent on oil and natural gas and those types of things. And when the price of those comes down, I think almost everybody benefits from it. You could make the argument that maybe Exxon Mobil and Chevron and a few of these companies might be hurt temporarily. But if those oil prices coming down takes inflation pressure off. If other things happening take inflation pressure off and interest rates come down, then the oil companies can drill and produce and get the oil out of the ground for less money. And so the lower oil prices don't even hit them as dramatically or affect them. So lower oil prices is good across the board for everyone. So you've got that happening. And like I said, it's very much a cause and effect type of thing that those two things are going on. And then there is some hope. You've had 3 different Fed govs have come out and said in the last 48 hours or so that they would be supportive of a rate decrease, a rate cut in the July meeting. And so that's a positive thing. So you've got all these positive things happening at the same time, and no one should wonder or be curious about why the Dow is up. I'm showing on, this has got a little bit of a delay on my live screen. I'm showing almost 280, S&P up 42, NASDAQ up over 200, and they've been higher. I think all 3 indexes, or at least I know for a fact the Dow has been higher already today. There's the 1-day chart, and you can see that briefly it was up, I think 300 points, or awfully, a little over 300 points, maybe 350 or so at one point in time, but still up 270 and looking very, very strong. Now, there's a lot of time left to trade today. Things could change. It could turn. There is no guarantee that where it's at right now is where it's going to stay for the remainder of the trading day. Yesterday saw a nice little rally into the close after things dipped a little bit. So you had some back and forth yesterday. You could get some of that today as well. Don't be surprised if things flatten a little bit. It's hard to imagine that we're not going to finish on a positive note. Something pretty drastic would have to happen during the day to melt down the market or have it collapse from where it's at. But like I said, there's a lot of time left to trade today, so we'll see. That's the backdrop of what's going on, what's causing the markets to move today. So there'll be more things develop and more things talked about as the day goes on, but that's where we're at in that immediate snapshot. Looking at what we've got going on, I'm going to start with our triple play stuff because we had our AMD trade closed this morning at its full target profit. Great trade, a little, not super long term, a little bit longer term than some of our trades are, and that's okay. I like to get into the triple play trades and be out of them within a week, where they're just a little bit longer than a week. But our meta trade filled this morning. We did lower our target price a little bit because we decided on a 1-day trade, if we could get 12, 13, 14% on a 1-day trade, that would be very much worth it. And I at one time had my limit order set at, I want to say 460. And then this morning I put on Discord that I was upping it to 475. I actually set it at 480 just to tease it a little bit, just to see what might happen. And then I was going to go back to 475, but I actually got filled at 480. So great trade there. Palantir profitable. Google, Google, I set it for next week's expiration instead of this week's expiration, I should say Alphabet, because I do think they're going to come back to this recent high or dip to the more recent low before the end of next week. But we'll see what happens. They're a little flat this morning, not a lot going on there, but everything else on our triple play stuff looking absolutely fantastic. We're up almost 140%. On the spread trade side of things, we had a lot of improvement in Amazon. Just the other day, Amazon is up nicely this morning, up $3.70 right now. This has gone up. We're about half the loss we were looking at just as little as yesterday in the middle of the day. So Amazon having a good day. CrowdStrike is one of the only stocks on my list right now that is down. They're a cyber defense company, and I guess there's some thought that with all of a sudden tensions easing and things getting better in the Middle East, that maybe CrowdStrike, not as much optimism. But look, that nothing has changed in this pattern. Look at how steady that 20-day moving average is, moving to the upside. I don't see CrowdStrike having a big break from that. 1-2 days of pullback and then another strong day to the upside. They're going to be absolutely fine. We're looking good on that. So our overall spread trade stuff right now, we're up almost 190%. Collar trades. Again, I'm probably going to start making some adjustments based on where short calls are relative to the price of the stock. Bank of America is a great example. We're still out in the middle of July for this short call strike price, but it's in the money now. We've moved from the stock's almost at 47. So we're going to make some adjustments to collar trades, not specifically for earnings, but because we have a number of situations where short calls are moving in the money or close to moving in the money, and we'll roll them out so we have more room for it to move up. There's another example, NVIDIA, the short call is still out of the money, but the timing may be good to move that one, cinch up our short puts a little bit. Palantir, we've got 150 strike short call. It's at 140. We're probably just going to move the puts up on Palantir. Snap, we had a call expire worthless on Snap. That should be a 0. And right now, all we have in place on Snap is a put spread to protect it. They're not too far out of the money, so we'll probably leave that one where it's at. SoFi, probably looking at an adjustment soon on SoFi. And Uber, our 90 strike short calls, almost, not quite, but almost in the money, will definitely shore up that short put. And what I mean by that is roll it up closer to being at the money. So we'll make some minor adjustments to a handful of these collar trades today and tomorrow, so that by the end of this week, going into the 4th of July holiday week next week, we'll be able to kind of sit back and relax a little bit and not have to focus too much on anything. One important piece of news as far as economic reports and what's on the calendar, Jerome Powell is set to, I think he testifies in front of Congress today. Trump is putting a lot of pressure on him, keeping the rhetoric very high and putting a lot of pressure on Powell to make an interest rate cut. And with 3 of the Fed govs just in the last 48 hours saying that they would support a rate cut in July, I think it's going to be difficult for Jerome Powell. He's going to look even more partisan than ever if he resists what the rest of the Fed is at least somewhat calling for. So we'll see how he does on that. I don't know if he's going to say anything that is really going to squash these markets. If he says that he is more open to a rate cut, or that things have changed to the point where he would be considering a rate cut in July, and if he's that specific about it, you might see that throw a little gasoline on the fire that's already burning on this market. If he sticks to his line about not being sure and is still worried about inflation because of tariffs, which no one's buying that anymore. That's starting to feel like a similar lie to transitory inflation, the lie that he helped the previous administration push for over a year. And he was complicit in that lie. I believe he knew the entire time, every time he said transitory inflation, and it's going back 4 years ago, but every time he said it, I believe he knew without a doubt that he was lying, that he did not believe what he was saying. We'll see what he'll do today, but I don't expect, whatever he does, I don't expect it to have a big, massive effect on the markets. I think this morning he's in front of Congress, and tomorrow he speaks at 8 o'clock in the morning. So we'll see what he says. GDP coming up later this week, durable goods, consumer sentiment at the end of the week, all things that could move the markets, but I think the likelihood is they will only push the markets higher if they're good news. If they're bad news, I think it's going to be, they might hold the markets in check a little bit, but I don't think they're going to squash this enthusiasm, what Charles Payne would call these animal spirits that are going on right now. So that's the backdrop of where we find ourselves on a Tuesday morning. I'm excited about where things are at. Looking forward to the rest of this week. Have a great rest of your day today, everyone. We'll be back on live tomorrow, 30 minutes after the open. Thanks. Bye-bye.